Assalamu alaikum, dear students. How are you? Uh, Today is the day 4 of our revision days P2P session, and today we are going to discuss full-time corporation tax, right? And don't forget that corporation tax minimum fixed weightage is 15 marks in the last section C, and it may come in MCQs as well. So you can assume 21 marks, very easy 21 marks from corporation tax, right? So it is vital to for F6 to clear this topic. If you work hard in this topic, you can easily these are cash marks, like I told you on the day one, like CGT, IHT, value added tax, and then corporation tax. These four topics makes almost 60 marks, right? So you can easily clear from these four topics. Okay, now whenever if somebody says you to calculate tax for individual, if somebody asks you to calculate tax for individual, what will come in your mind? Three columns: non-saving interest dividend, non-saving interest dividend. Okay, but if somebody says you to calculate tax of a company, this format, see this format will come in your mind. This is just one column, just one column format will come into your mind. The first thing is trading profits, second thing is property income, third is gains, fourth is interest income. You will add these four, you will get total profits. From total profits you will deduct QCD, qualifying charitable donations. You will get total taxable profits, and on total taxable profit you just have to apply 19%, 19%, 19%. That's it. So repeat, if somebody asks you to calculate tax of individual, three columns will come in your mind: non-saving interest dividend, non-saving interest dividend. Okay, but if somebody asks you to compute tax of company, only this single column, this just pro forma will come in your mind. Okay, and there are major four heads in companies: trading profits, property income, gains, and interest income. Now be active. If you double click trading profits, so trading if you double click trading profits, so you will go there, this area. How we going to work on trading profit? Hope you remember yesterday's trading profit journeys from accounting net profit to tax adjusted trading profit. And this journey, in between this journey, you will get capital allowances as well. So same we did yesterday. The journey is here: accounting net profit to tax adjusted trading profit. Once you calculate this, you will write trading profit here, and your trading profit is ready. Second head is property income. Second head is property income. If you double click property income, this PNL will come. This PNL, the red one, the red pen PNL will come. Okay, and what is the format of property income? Rental income less allowed expenses. But one very important thing, yesterday we also did a question. For individuals, property income is taxed on receipt basis, cash basis, cash inflows and outflows. But for companies, property income is taxed on accrual basis. For companies, property income is taxed on accrual basis. Don't forget the difference. Okay, then next is gains. If you double click gains, so your first day, hope you remember the first day. If you double click gains, this is the format of gains. For company. This format: C, disposal proceed, DP less cost unindexed gain, DP less cost unindexed gain, less indexation allowance, you will get chargeable gain. Okay, right? So this chargeable gain you will fit in the main pro forma. This chargeable gain you will fix in the main pro forma. Okay, so we just discussed three things: trading profits, property income. The third thing is gains. Okay, now the fourth thing is a different one, and this is called interest income. This is a different separate head. In companies. Interest income. If you double click interest income, you will come to this packet. Sorry. Now This interest income box is also called loan relationship box. This interest income working is also called loan relationship working. Please be active, be active. What comes in this box? What comes in this box? Number one, interest income from non-trading activities. Interest income from non-trading activities. Normally for companies and for our F6 course, interest income is always non-trading, right? It may be trading only for bank, it may be trading activity, but we never get a bank question, in our course. So that's why interest income is normally from non-trading activities in our course. So this will be added. Less, now you have to deduct less interest expense on loan to finance non-trading activities. Now the question is, sir, if we have taken loan, to finance trading activities, then that interest will be deducted from trading profits. But if you have taken loan to finance non-trading activities operation, then in that case this will be deducted from loan relationship box. Okay, finally, one more thing, less interest expense on loan to buy property for letting. If you have taken loan, to buy a property and you want to let that property, you want to give that property on rent, then such loan interest will also go in this packet. Okay, now for F6, in F6 course, this packet answer will always be positive. See, I have written one thing, always positive in F6, always positive in F6. Okay, right? Now this thing will be taken to the main format. So main format, in corporation tax main format, there are four things, very simple things: trading profits, property income, gains, and interest income. When you add these four, you get total profits. And from total profits you just subtract QCD, if any given in the question. QCD stands for qualifying charitable donations. Finally you get total taxable profits. And good news is here is that for individual there was very detailed, very difficult, very detailed tax working. Here right now there is no tax working, no bands, nothing, just flat tax rate, 19%. One more thing, for individual the tax rate for non-saving is different, interest is different, dividend is different, gains is different, QG is different, RPG is different. In companies, all incomes are equally taxed, at 19%. Okay, so don't forget this basic thing. Now few important points for you guys. Now read the red pen. For companies, QCD is always gross. Hope you remember gift aid donations. Hope you remember the gift aid donation topic in individuals. In individuals, gift aid donations are paid net, and you have to gross it up, divide by 18 to 100. But in companies, QCD are already gross. QCD are already ready-made gross. You don't have to do anything. Number two, dividend income is exempt for companies. Very good. For individuals, dividend income is taxable, but for companies, if company has invested in shares of another company, if one company has invested in shares of another company and company is receiving dividend income, that dividend income is totally exempt. It will never come anywhere, forget it. For companies, very important line, for companies, interest income is taxed on accrual basis. I hope you remember. For individuals, interest income is taxed on receipt basis. You remember, we used to check the receiving date, we used to highlight the receiving date. But for companies, interest income is taxed on accrual basis. Okay, one more thing, for companies, property income is taxed on accrual basis, but for individuals it's cash basis. One more thing, company pays tax for accounting period. I told you very many times that individual pays tax for fiscal year, but company pays tax for accounting period. So in each and every question you have to check the accounting period. In companies question you have to check the accounting period. Okay, now one very ready-made things for you guys. I have written here for interest income. See, for companies interest income is taxed on accrual basis. For companies interest income is taxed on accrual basis. Now how we are going to calculate accrual basis income or expense? I have made two accounts. Normally I feel relaxed teaching through accounts, but there are some people who teach through formula as well. Now listen, whenever you need to calculate interest expense, see, this is interest payable account, this account is interest payable account. Interest payable, first of all we are discussing about interest expense. For companies interest expense is also deducted on accrual basis. And in the exam they have given you opening accrual, opening accrued expense, C, closing accrued expense, closing liability, and actual interest paid during the year. These three things are given. You need to fix these three things in the account. You need to fix these three things in the account, and automatically you will get this red thing, interest expense for the year C. Automatically you will get this balancing thing. So simply keep this account in your mind. I've already sent you this these slides, so simply you can keep this account in your mind. Opening accrued, this is opening accrued expense, this is closing, this is cash payments made, and you will get P&L figure, right? One more thing, if you don't want to do with the account, some students do with the formula. How you do this? Closing accrued plus cash paid, closing accrued plus cash paid less opening accrued, closing accrued plus cash paid less opening accrued will give you expense for the year. 30 seconds wait. Azan. Okay, dear student, now look at this. Is the second account is interest receivable account. Interest receivable account is for interest incomes. Okay, so you may be given opening accrued income, you will write here cash interest received during the year and closing accrued income. By using these three numbers you can easily calculate interest income for the year. The red pen, and this interest income, the red pen written P&L, this will go in the loan relationship, right? This is on accrual basis. So if you want to do through accounts, you can do it through accounts. I normally prefer accounts. And if you want to use the formula, then simply closing accrued plus cash, closing accrued plus cash less opening accrued, closing accrued plus cash less opening accrued. Okay, these accounts are to be used only for companies. Okay, because in companies interest income is taxed on accrual basis. Don't forget. Yes, for individual it's cash basis. Yes, for individual it's cash basis. Okay, right? One line I have already taught you. You can read, if company has taken loan to finance trading activities, then loan interest expense will be deducted from trading income. Okay, if you have taken loan to finance trading activities or trading operation, then that loan interest will be deducted from trading income P&L. Now, the next topic is long period of account. Be very active, please. The next topic is long period of account. Before we move on to long period of account, first we need to discuss two words which is very important. Number one is period of account and number two is accounting period. See, I have already highlighted. Number first thing is period of account and the second thing is accounting period. Now the question is, sir, what is period of account? Read it. Period of account is the time period for which accountant prepares the account. Period of account is the time period for which accountant prepares the account. So accountant may prepare accounts for 3 months, 6 months, 8 months, 12 months or more than 12 months. Accountant may prepare accounts for more than 12 months. Yes, he can. So period of account may be sometimes period of account may be greater than 12 months. This is possible that sometime period of account may be greater than 12 months. Now come to the accounting period. What is accounting period? Accounting period is the time period for which company pays tax, for which company goes in front of tax department to give tax. Okay, so what is accounting period? Company pays tax for accounting period, and by law this accounting period cannot exceed 12 months. That means government does not accept more than 12 months tax together, right? So accounting period must not exceed 12 months, yes, it may be less than 12 months, it's possible. Now just read these two definition and think about a case. What if look at here. What if accountant prepares period of account for 15 months? What if accountant prepares accounts for 15 months? So you have a 15 months period of account, but when you go to tax department, they will say get out. They will say no, we don't want 15 months tax together. They will say we don't want 15 months tax together. Maximum we take 12 months tax at a time. So what is the solution now? Your accountant has prepared period of account of 15 months, but tax department is saying no, we take tax of maximum 12 months in one go. So now we need to split this period of account. So question, sir, how are we going to split it? Question, how are we going to split this period of account? First 12 months aside and remaining 3 months. See, this is the method. First 12 months on one side and remaining months on the remaining side. Okay, right? First 12 months and then last 3 months, because this is 15 months period. Now you will find one more question in your mind. Sir, accountant has prepared accounts for 15 months, so everything in the question will be given for 15 months. But now we have to break things in 12 and 3 months. Sir, how we are going to do it? Wait, let me teach you. There are total 4 things. We just discussed the format. Total there are 4 things: trading income, gains, property income and interest income. Trading income, gains, property income and interest income. So these 4 things we have to split. These 4 things, please be very careful, be very attentive. These 4 things we have to split between 12 and 3 months. Let's discuss. Normally you are given accounting net profit for 15 months. Normally you are given accounting net profit for 15 months. Normally you are given accounting net profit for 15 months. Okay, so what you will do, all adjustment, add back all those expenses which are allowed in accounting but not allowed in tax. You remember the trading income adjustment, and first you will calculate, see this, tax adjusted trading profit before capital allowance. That means you have done all adjustments. All adjustments for 15 months except for capital allowance. capital allowance. Except for capital allowance, you have done everything. You have done all adjustments except for capital allowance, total for 15 months. Now, assuming this profit is 150,000. Now this profit is for 15 months. This profit is for 15 months. So let's start. We need to break this profit. We need to break this profit into 12 and 3 months. This 150,000 is for 15 months profit, so we need to break it for first 12 and remaining 3. See, I just did it. Open your eyes. And what is the name? What's the name? It is written trading profit before CA. Trading profit before CA means before capital allowance. Now students may ask, sir, how are we going to calculate capital allowance? Listen, for capital allowance you have to calculate separate working for these two periods. First 12 months you will calculate total separate capital allowance, and remaining 3 months you will do separate, just like as if you are solving two different questions. So first 12 months capital allowances will be separate working, AIA, WDA, everything will be separate, and remaining 3 months capital allowances working will be separate. Now you will get tax adjusted trading profit. Tax adjusted trading profit after everything. Okay, so in this way your trading profit is done. Now the next step, students may ask, sir, in this 15 months we may have property income. Yes. So how we are going to split the property income between 12 and 3 months? How are we going to split the property income between 12 and first 12 and remaining 3? Open your eyes, read it. Using accrual basis. You will split property income using accrual basis. Accrual, not cash basis, accrual basis. Sir, we may have interest income in these 15 months. Okay, no problem. So interest income will also be divided between first 12 and remaining 3. Using accrual basis. Okay, finally, gains. Sir, there may be possibility we have 3-4 capital gains in this 15 months. So how are we going to split capital gain between first 12 and last 3? Very easy. Open your eyes. Just highlight the disposal date. Of gains. So if disposal date of any gain lies in first 12 months, disposal date of any gains lies in first 12 months, that gain will come in first 12 months. And if disposal date of any gain lies in last 3 months, that will go in last 3 months. Okay, right? That's how you work. That's how you split things. Finally you will add, see the screen. Finally you will add all these, so you will get total profits. Okay, now from total profits we know we deduct QCD. From total profits, we deduct QCD. Now the question is, sir, it is possible that we have 3 4 QCDs in one question. Yes. So how we are going to split QCD? Open your eyes and read it. Payment date. If the payment date of QCD lies in first 12 months, then it goes in first 12 months. If the payment date of QCD lies in last 3 months, then it will come in last 3 months. Okay. Finally, after deducting QCD, you will get total taxable profits. The TTP thing, and then you know the story. Just simple 19% tax rate. You have to apply. Okay. So this way you do it. In your exam kit there are few questions like stretch limited and do not panic limited. These questions relates to this topic and you can practice. Okay, this is not a difficult area, but concept must be clear. And be attentive. There is a very short theoretical topic, like 2-minute topic for companies. For individuals this topic is a little big, but for companies it's very minute topic. UK resident company and non-UK resident company. What is a UK resident company? if a company is said to be a UK resident, then that company has to pay UK earnings tax in UK, plus worldwide earnings tax also in UK. If a company is marked as UK resident company, then that company has to pay his worldwide earnings tax on UK. UK's earnings in UK plus tax on worldwide earnings also in UK. Now, what is non-UK resident company? Non-UK resident company is a company who only pays UK earnings tax in UK, and the remaining worldwide earnings tax they don't pay in UK. They don't pay worldwide earnings outside UK earnings tax in UK. They never pay, right? So that's the difference between UK resident company and non-UK resident. Now the question is, sir, how we are going to check that whether our company is UK resident or non-UK resident? How are we going to check whether our company is a UK resident company or non-UK resident company? Very simple. These 2 points, just 2 points. If look at here, if a company is incorporated in UK, if a company is incorporated in UK, simply it becomes UK resident. If a company is incorporated in UK, if a company is incorporated in UK, it becomes UK resident. Or there is one more way. Let us say if a company is incorporated overseas, if a company is incorporated overseas, but still read the lines, but if its central management exercise in UK, if its central management exercise in UK, then central management exercise in UK means board meetings. Normally board meetings are done in UK. Then that company is also UK resident company. So there are two ways you can make your company UK resident. Number one, incorporated in UK. Number two, second way, no matter you have incorporated your company in a foreign country, but still if the central management is excised from UK, then that company is UK resident company. Okay, these things sometimes they ask in theory. Now a little touch of self-assessment companies. Listen, my dear, there are normally two things. One is tax payment and one is return filing. Open your eyes. One is tax payment, which is money payment, and one is tax return filing. Return is basically a document form. Now first listen one thing. For companies, all companies, either is a small company or a large company, tax return filing date is almost same. Tax return filing due date is almost same for all companies. Tax return filing due date is almost same for all companies. Open your eyes, my dear, open your eyes, please. Let us say you have accounting period of 1st January 2019 to 31st December 2019. 1st December 2019 to 31st December 2019. Then for this accounting period, you have to file return 12 months from the end of the accounting period. See, 12 months from the end of the accounting period. That means if your year end is 31st December, then 12 months is 31st December 2020. That means last day for filing tax return is 31st December 2020. You can just memorize one number: 12 months. 12 months from the end of the accounting period. 12 months from the end of the accounting period. That's it. Sir, what if we filed return late? Then these are the penalties. You can see 0 to 3 months, £100, 3 to 6 months, £200, and this packet will apply. If you file late tax return, then this packet will apply, this packet will apply, this packet will apply. Now I have one special case for you. Normally students do mistake in that case. You guys are requested not to do that mistake. Listen, I just told you 12 months, but what if you get a question of 15 months period of account? What if long period of account? We just discussed. What if you get a question of 15 months period of account? What you will do? For tax calculation purpose, if you have a 15-month period of account question, look at me please. If you have a 15 months period of account question, For tax computation purpose, you will divide it between first 12 and remaining 3. You will divide it between first 12 and remaining 3. Look at here. But for return filing, you know when you have to file the return? From 12 months from the end of the period of account. 12 months from end of the period of account, and that period of account ends on 31st March. See, 15 months. Period of account is exact 15 months. Period of account is 15 months. Okay. So due date, they ask, there are questions in past papers and exam kit that what is the due date for filing tax return of this long period of account. So it is from 31st March 2020, 12 months, that is 31st March 2021. Don't forget. Okay, right? Complete period of account return will be filed. Complete period of account return will be filed after 12 months from the end of the period of account. So no need for return purpose, no need to split between first 12 and last 3. Yes, for tax computation purpose, long period of account is we do split long period of account between first 12 and remaining 3. But for return filing, no need to do this. Don't forget, this is a dodge. This is something different. You may lose your marks in this case. If you are getting things, please hit a message. Hit a message on WhatsApp. Come on, quick. Now, I'm telling you one thing orally. Look at here. Oral things. For tax payment purpose, companies are divided into two heads: small company, large company, small company, large company, small company, large company, small company, large company. Listen, a small company pays tax from after the end of the accounting period, 9 months plus 1 day, 9 months plus 1 day, 9 months plus 1 day. For example, there is a small company, and whose accounting period ends on 31st December 2020. There is a small company, and that company's accounting period ends on 31st of December 2020. So what is the due date for tax payment? After the end of the accounting period, 9 months plus 1 day, 9 months plus 1 day, 9 months plus 1 day. So just add 9 months plus 1 day in 31st December 2020. So automatically your due date will be 1st of October 2021. I just told you this orally, but this thing I will come in the past paper. Today's past paper, this thing will come. Okay. So for small companies, tax payment due date is 9 months plus 1 day, 9 months plus 1 day from the end of the accounting period. Now, sir, what is the how large companies pays tax? Large companies pays tax in installments. Large companies pays tax in installment. For example, there is a large company whose accounting period is 12 months accounting period. Look at the screen. There is a large company whose accounting period is 12 months, who has accounting period 12 months accounting period from 1st of April 2019 to 31st March 2020. From 1st April 2019 to 31st March 2020. This is the accounting period, right? So for this accounting period, large companies pays tax and installment. Sir, how can we learn? How can we memorize? How can we recognize the due dates? How can we recognize the due dates for these installments? How can we recognize the due dates for installment? It's very simple. You please look at me and I'll explain you. From the beginning of the accounting period, for example, the accounting period beginning date is 1st April. From the beginning of the accounting period, go to 7th month. So accounting period starting in April. So April, May, June, July, August, September, October. 7th month is October. So first installment will be paid on 14th of October 2019 according to this question. And for remaining installment, 3 month. After every 3 months gap, you pay remaining installment. So the second installment is 14th January 2020, third installment is 14th April 2020, and fourth installment is 14th July 2020. Fourth installment is 14th July 2020. Okay, right? Don't forget one thing, there is a cap on last installment. There is a cap on last installment. That last installment must be paid within 4 months, within 4 months of the end of the accounting period. Last installment must be paid within 4 months of the end of the accounting period. My dear student, open your eyes. Check, your accounting period ends on 31st March. See, your accounting period ends on 31st March 2020, and now add 4 months. Now add 4 months. After 31st March, April, May, June, and July. See the last installment is at 14 July. Okay, so last installment must not exceed fourth month. Okay, it must be paid within 4 months. Now, as an accounting student, you are also accounting student and you have some knowledge. You will ask, sir, in this case, in this large companies case, we are paying tax, we have started paying installment before the end of the accounting period. See, first two installments are paid before the end of the accounting period. That means we won't have actual profits. We won't have actual profits. So sir, how are we going to pay? How are we going to pay these installments? Very simple. Budgeted. You will be paying through budgeted TTPs. You will be paying these initial installment through budgeted TTPs, budgeted profits. But be careful, don't do fraud with government. If you do a fraud, for example, you make a small budget and you pay very little payments, and in the end your real tax came out to be a big number, and you said sorry, it's my mistake. Then tax department will say, no need to say sorry, you will have to pay interest. You will have to pay interest, and which is very higher. So read it. In case of underpaid tax, company needs to pay interest of 3.25% per annum. Company need to pay interest of 3.25% per annum, right? And but in case of overpaid, if you have overpaid, then that means government has used your money, so government will return you interest, and that will be 0.5%. That will be only 0.5%. Okay, so be careful in doing budgets, in making budgets. If you make wrong budgets, so you will be in loss. You will be in loss. Okay. Now, this is very important topic, and these are again very cash marks. We need to give some time on it. Come on, be quick. Now the question is, sir, how are we going to identify which company is a small company and which company is large company? Please look at me. Which company is a small company and which company is large company? Wait. You remember the total format? You remember the total format of companies? It ended on TTP. The company's normal total format ended on TTP. Now, how to identify large company or small company? Here, look at here. First, you have to write TTP, and then you have to add you you have to add dividend received from unconnected companies. Dividend received from unconnected companies. Now, the question of student is here is that, sir, what is unconnected company? What is unconnected company in which your holding percentage is less than 50? In which your holding percentage is less than 50, like this. See, you have only invested 30%. If you are getting any dividends from B company, then this dividend will be added here. And now TTP plus these dividends, TTP, total taxable profits, plus these dividends will give you augmented profit, a new number. Augmented profit, a new number. And in short, we call it AP. In shortcut, we call it AP. Sir, what is the use of this AP? This AP will be used in taking decision that whether this company is a large company or small company. Whether this company is a large company or small company. Okay, don't forget. Now, next question, sir. What if we have received dividends? We have received dividends from a connected company. We have received dividends from a connected company. Connected company is a company in which we have holding more than 50%. Now open your eyes and listen. Connected companies dividends are never ever come anywhere. Only unconnected companies dividends are used here. But still, read this line. Still, all dividend income are exempt for companies. Still all dividends income are exempt. You don't need to pay tax. You don't need to pay tax. You don't need to pay tax on dividends at all dividends are exempt. Only few dividends are used in this working, right? Now, $1 million words. Listen, this topic, the topic which is right now in front of your screen, this topic has nothing to do with corporation tax computation. This large company, small company topic has nothing to do with corporation tax computation. This is just linked to corporation tax payment. Through large and small you decide, whether to pay tax in 9 months or whether to pay tax in installment. It has nothing to do with tax computation. For tax computation we already studied a flat tax rate. That is 19% flat tax rate. Okay, now if now what's the game? How to recognize that the company is large or small? Simple. If your AP is greater than limit, then the company is large company. Very simple words. If your AP is greater than limit, then you are a large company. If your AP is less than the limit, then you are a small company. Now sir, what is limit? What is the limit? Limit is 1.5 million pounds. Limit is 1.5 million pounds. Limit is 1.5 million pounds. Now, there are two things because of which we need to apportion our limits. This limit is apportioned. This limit is apportioned because of two reasons. This limit is apportioned because of two reasons. Number one, accounting period. If your accounting period is less than 12 months, if your accounting period is less than 12 months, then you need to apportion the limit. How? See, this is the example. For example, your accounting period is 6 months only, then your limit will be prorated. Then your limit will be prorated like this. Then your limit will be prorated like this. Look at here. Number two, number of 51% group of companies. Number of 51% group of companies in the group C. For 51% group of companies, just remember the 50% holding. C. A's holding in B is 80%, which is greater than 50, and A holding in C is 80, which is greater than 50. So we will say in this group, first of all we'll say like this. A has 251% group of companies. A has 251% of group of companies. But when we need to apportion the limit, we need to count the members of 51%. See, 1, 2 and 3, there are three members. So you will divide the limit by 3. I repeat, in the exam the wordings will be like this. See, a company has 251% group of companies. So 251% group of companies means we have to add one also for us. Two members other than us, and we'll add one for us. So automatically you have to divide. In this case you have to divide it by 3. In this case you have to divide limits by 3. Getting? Now, so again, if you want to decide your company is large or small, you need to compare AP with limits. You need to compare AP, augmented profit, with limits. Normally limit is 15 lakh, but limit is apportioned because of two reasons. Number one, because of if accounting period is less than 12 months, then you apportion the limit. And if you are part of 51% group of companies, okay, right? Now, giving you a very short question. See, let us say you have this question. See, accounting period is 9 months and you have two associated companies. So how you will apportion the limit? Look at here. 15 lakh multiply by for accounting period we'll do 9 upon 12. For accounting period 9 upon 12, and it has written a company has two associated 251% group of companies. So 251% group plus 1 for us, 2 plus 1 is 3, so you will divide with 1 upon 3. Now can you tell me, wait, let me calculate. 375, 375,000 is the limit. Your limit is 375,000. See, your limit is 375,000. You have calculated the limit. Now let's calculate AP. In AP, we first write TTP, and then we add dividends from unconnected or unrelated company, this dividend. So 450 plus 30, 450 plus 30. In this case, AP is 480. 450 plus 30, the AP is 480. AP augmented profit is 480. Now, boys and girls, what would you suggest? What do you suggest? As AP is 480,000 and your limit is 375. AP is 480,000 and your limit is 375. That means in this question, your AP is greater than limit. That means this company is a large company. And when this company is a large company, now you need to pay tax in installments. Okay. One biggest mistake, never forget, large and small, please. Large and small company has nothing to do with tax computation. Tax computation is same for everybody. Large and small are linked with tax payment. Okay, are linked with tax payment, are just used. Large and small companies are just used to decide when you have to pay the tax. Okay, don't forget this. This is also a very good topic. I saw this topic in last recent examiner report. Examiner discussed this issue. Examiner said we asked this issue but people don't know it. Now what's the issue? Look at me. Sometimes it happens that you are a large company. Sometimes it happens that you are a large company, but still you are exempt from installment. Repeat. Nor what is the normal rule? Normal rule is this: small company pays tax 9 months plus 1 day after the accounting period. 9 months plus 1 day, 9 months plus 1 day, 9 months plus 1 day. And large company pays tax in installment. Large company pays tax in installment. This is the normal rule. But this topic, whatever is written in front of your screen, it's an exception. Sometime you become large, you are a large company, you have become large company, but still you are exempt from installment, and you have to follow that rule, 9 months plus 1 day. Now how you can get that exemption? There are two separate tunnels. This is first tunnel and this is second tunnel. What is the first tunnel? Last year you are not a large company, means you are this year large but last year you were small. Last year you were small and this year you are large. Then you can exempt yourself from installment. No matter, right now you are large, right now this year you are large, but last year you were a small company, so you are exempt with one condition. Plus your current year AP augmented profit must be less than 10 million. 10 million is not 10 lakh, is 100 lakhs. Okay, 10 million is a big number. So your AP this year AP must be less than 10 million. If you meet these two conditions, if you meet this condition and this condition, you are exempt from installments this year, and you should follow that old rule, 9 months plus 1 day. Okay, I repeat. For example, you are right now in this year you are large company, but last year you were small. First condition. Plus this year's your AP should be less than 10 million pounds, then you are eligible for this exemption. Okay. And the second way, what's the second way? Second way is your corporation tax liability is less than 10,000 pounds. If your total corporation tax liability is less than 10,000 pounds, then again you are exempt from installments, then again you are exempt from installments. Now listen, you have a company who has, just for example, just giving you one example, see, look at the screen. This year you are large, for sure because of 2 million. TTP 2 million is greater than your normal limit. You are for sure this year you are large. Okay, but go to last year. Last year you have 251% group of companies. You are a member. Total 251% group of companies are there. Okay, so your limits will be divided by 2. Your 15 C, your 1,500,000 limit will be divided by 2. So your limit is 750,000. Your limit is 750,000. Okay, now limit is 750. And what's your AP last year? Look at the screen. What's your AP last year? Your AP is just 335. Your AP is just 335,000, which is less than 750,000, which is less than 750,000. That means last year you were small. Last year you were small, and this year you are large. Plus your this year profits are less than 10 million, plus your this year profits are less than 10 million. So what's the conclusion? You don't need to pay tax and installment. Think over it. No matter you are large this year, but you qualified for exemption. You qualified for exemption. You qualified for exemption. Look at the screen. Okay, now if you are getting things, again please hit a message, come on, quick, hit a message on WhatsApp. Listen, one question students are asking, if we have a 15-month period of account, so we normally divide it between 12 and 3, and the tax payment of first 12 and remaining 3 are separate. For example, we are a small company, so for first 12 months from the accounting period, that is December, we have to count 9 months, and from the second accounting period, which ends on March, we have to count again 9 months. That means 2 separate payments. Tax payments are separate, but tax return not separate. For 15-month period of account, tax return due date is same. I already taught you. But for 15-month period of account, tax calculation is split between first 12 and remaining 3, and also tax payment also, first 12 months separate payment and remaining 3 months separate payment. Now you have some corporation tax losses. Listen, right now please be very clear, I am just talking about our single company. I am not teaching right now group of companies. We are talking about single company. So single company may have trading loss. See, trading losses can be carried forward and set off against future total profits. Hope you remember the new rules for companies. In old days trading profit, whenever we used to carry forward trading profit, they used to set off against future trading profits. But now this is not the case. Trading losses can be carried forward and set off against future total profits. Okay, but the good news here is that partial claims are allowed. Whenever you carried forward company trading loss against future total profits, then you can listen my words, you can save your QCD. That means you can do planning because partial claims are allowed. Partial claims are allowed. But there is one more option, you hope you remember. Trading losses. Look at here. Trading losses of any period can be set off against total profit of same period. Trading losses, please look at here. Trading loss of any period can be set off against total profits of the same period, right? And last 12 months, last 12 months, count 12 months, last 12 months total profits. But for current year and 12 months back, no partial claims are allowed. For current year and 12 months back, no partial claims are allowed. That means if you want to do current year and 12 months back set off, current year and 12 months back set off, you may have to waste, sometimes you may have to waste your QCD. Sometime you may have to waste your QCD. Now, one more thing. Look at here. If this is especially for companies, this is not for individuals. See yellow highlighter. See this. If a company wants to go 12 months back set off, if a company want to do 12 months back set off using trading loss, then for that company it is mandatory, it is obligatory to do current year set off first and then go last 12 months. But in individuals you can directly go 12 last fiscal year. In individuals you can directly go last fiscal year. This is the difference. If in companies, if you want to do last 12 months set off, you have to do current period first. This is mandatory to do current period and then last 12 months. Okay, right? This is must. Giving you a little planning. See, look at here. In the question you have loss in the mid accounting period. In the question you have loss in the mid accounting period. Can you see? In the mid accounting period you have loss. Okay, and you plan to do current year and carried back first, current year and carried back set off first and then carried forward. Now you do current year 10,000, no matter you have QCD, you have 2,000 QCD, but you have to waste it. See, this is wasted. Okay, and then you went 12 months back. In 12 months back you already had QCD, but again you have to set off complete 15,000, because for current year, listen carefully, for current year and last 12 months, for current year and last 12 months, no partial claims allowed. For current year and last 12 months, no partial claims allowed. That means you have to waste your QCD. You have no option other than wasting your QCD. Okay, but when you do carried forward, yes, you have option to save your QCD. But in this question, carried forward is very little amount. Now there is one question, sir, can we directly go forward? Yes, you can. If you don't want to do current year and last 12 months, you can directly go forward. Or, sir, if I do current year and then directly go forward, yes, you can. No need to go 12 months back. 12 months back is not mandatory thing. 12 months back is not a mandatory thing. Now there is one more thing, not difficult. Terminal loss. This is in individual as well. Terminal loss. What is the identification of terminal loss? The business is getting closed in front of you. So okay, so business is closed, and in the last period, in the last accounting period, you get trading loss. Business, let us say, is closed on 31st December 19, and you have trading loss in the last period. So that loss will be called terminal loss, TL. That loss will be called terminal loss. Now, as normally any business ends with tears, and losses, so normally government gives extra relief. On closure of business. Okay, so now your 12 months is extended to 36 months. Now you can go 36 months back, 36 months back. How you do it? Listen. First of all, this 150,000 will be set off against current year. First, 150,000 will be set off in the current year total profits, and then from the beginning of this last period, you go 36 months back. You go 36 months back in LIFO. You go 36 months back in LIFO. That means first this one, the closest one, then the way you do this, see, first this 60,000, then this 25,000, and then this 25,000. There may be possible sometimes after using all losses, some losses are wasted, and we call it unrelieved loss. Okay, so don't forget that whenever you see business closure or cessation of business, and you have trading loss, in the last period, so that trading loss limit will be extended, and you can set off 36 months total profits. One extra thing I'm telling you right now, it will help you. In individuals, open your eyes. I know there are a lot of things now, no, this is your paper, you have to give. Listen, in individual terminal loss can set off last 3 fiscal years trading profits. In individuals, terminal loss set offs last 3 fiscal year which profit? Trading profit. But in companies terminal loss can set off total profits. Okay, don't forget, this is a difference. Now, we just discussed property income. In companies there is a head of property income. Read the rules. Companies property loss, listen, company's property loss is always set off against current year total profit. If company has a property loss, that means a negative number in property income PNL. That means a negative number in property income PNL, a negative number in property income PNL. Look at here. So in that case, what you do, that company's property loss will first set off your current year total profits. And any unused loss will be carried forward. Against future total profits. Okay, but read the rules. In current year, see this, no partial claims allowed. If you set off company's property loss in front of current year total profits, you cannot do partial claim. That means you can't save your QCD. You have to waste. In the current year, you don't have any option other than wasting your QCD. But when you carried forward your property loss, when you carried forward your property loss for future periods, then you also set off against total profit. But now partial claims are allowed. For future periods, partial claims are allowed, like trading loss. Okay, means you can save your QCD. Read it. In future, you can save your QCD. Current year you can't do partial claims, but when you carried forward property loss, you can save your QCD. Now see, I have changed the color. Red pen, come on. Important line. In property loss, first you must do current year set off, then future. If you want to go in future, first you must set off current year total profits and then go in future. But in trading loss, you can directly go in future with full loss. Yes, I told you. In trading loss, you can directly take the complete loss in future and do future set off directly. It is allowed. But For property loss, if you want to take your loss in future, first you have to do current year set off. That is mandatory. That is mandatory. Okay. Okay. Now we are taking a 5 minutes short break, and then we are coming back. Get yourself refreshed. See you. Okay. Welcome back. Welcome back. Welcome back. Listen. Now we are going to start group of companies. There are total major in the group of companies chapter. There are two major groups. The first group is 75% group. The first group is 75% group. We also call it, please look at me, we also call it group relief group. 75% group or group relief group. Listen, how do we make this 75% group? See, there are two conditions. See the screen. There are two conditions. I need your energy, I need your support in this topic. Please, you have to listen very attentively. For 75% group, there are two conditions. Number one, direct holding at each level. Direct holding at each level must be greater than 75%. And if you are making a big group like sub subsidiary or indirect subsidiaries group, then your effective holding must be greater than 75%. What do you mean by effective holding? Look at here. A has 90% holding in B. A has 90% holding is B. That means A and B are part of 75% group. Now B has 90% group holding in C. Yes, B and C are part of 75% group. Now, if you want to make a group ABC, if you want to connect ABC in one group, then you have to multiply these two holding percentage. So 0.9 into 0.9. 0.9 into 0.9 gives you 81%. 81%, which is greater than 75, which is greater than 75. 0.9 into 0.9 is 81%, which is greater than 75. So yes, ABC top to bottom is one single group. ABC top to bottom is one single group. Okay, 75% group. Now come to D. A has 80% holding in D. That means which is greater than 75, which is greater than 75. So yes, D is also part of the big group. D is also part of the big group. Now there is a turning point. D has direct holding of 80% in E. D has direct holding of 80% in E. Yes, D and E can make the group, but E cannot be part of the big group. E cannot be part of the big group from top to bottom. See, from A to E, 0.8 into 0.8, you can multiply. 0.8 into 0.8 gives you 64%, which is less than 75, which is less than 75. So my dear students, E is not part of this big group. E is not part of this big group. So you have listen, you have only the big group of ABCD. ABCD is the big group. Okay, 75% group. So in short, the conditions of 75% group: at each individual level, direct holding must be greater than 75%. Direct holding must be greater than 75%. And if you want to make a big group, then effective holding must also be greater than 75%. Okay, now what a 75% group members can do? What are the advantages? Of 75% group? Listen, in this 75% group, there are some companies are called surrendering companies and some are called claimant companies. Surrendering company is the company who gives away his loss to another partner, to another member, right? Surrendering company gives away his loss to his brother, to the members, to the other members of the group, right? And the company who receives the loss, is called claimant company, right? Now, so now you can think that loss of one company can be used by other company as well. Within 75% group, please look at me, please. Within 75% group, one company's loss can be used by other company. So now the question is, you may ask the question, sir, which loss can be transferred? Now, according to new rules, there is a big list. The list has been extended. These 5 losses can be surrendered by surrendering company. These 5 things can be surrendered by surrendering company. Number 1, read it. Trading loss for the year trading loss, any amount you can surrender. You can surrender 50%, 20%, 30%, your wish. Trading loss for the year, you can surrender any amount. Trading loss for the year, you can surrender any amount. Okay. Number 2, trading loss brought forward. If you have, listen, if you have trading loss brought forward, if you have trading loss brought forward from last year for your own company, then you can give that trading loss to your brother, but only excess amount. What does it mean? That means that brought forward loss you have to use first. And then the remaining unutilized loss you can give it to your brothers. Okay. Then third thing, property loss for the year. You can only transfer property loss to your brothers, to your members of the group, only excess amount. Only excess means first used it completely, first used it to the maximum, then the excess you can give it to your brothers. Property loss brought forward, the same case. Property loss brought forward, again first you have to use it for yourself, and the excess amount you can transfer to your brothers. QCD for the year, only for the year. QCD can be transferred only excess. That means first use yourself completely, and whatever is left you can transfer to your brothers. Okay, to the members of the group. So don't miss these points are very important. I have already sent you these points on WhatsApp. Okay, these slides are already sent to you. So these things can be surrendered. Now see this red marker. If A company has trading loss for the year of 200 and A is transferring to B, now B must use this loss now. Very good. Listen, first, we have just studied that surrendering company may surrender 5 things. We have just studied that surrendering company may surrender 5 things. Surrendering company may surrender five things. Surrendering company may surrender 5 things. Okay. Now, when surrendering company transfers his loss to claimant company, so claimant company will set off his own profits. Obviously, claimant company will set off his own profits. Now, which profit claimant company will set off? That is TTP. Okay. Again, I repeat, sorry. Surrendering company will give away his five things which we just studied, and those 5 things will come to claimant company, and those 5 things will set off claimant company's TTP, not total profit. TTP, taxable profits. Okay. Now, one more condition. If, for example, see the screen. In the screen you can see the numbers. See, for example, A company has trading loss of 200. A company has trading loss of 200. And B company has TTP of 120. A company has trading loss of 200 and B company has TTP of 120. Now, if A company transfers complete loss to B, B cannot use it immediately. And you know what's the condition? The condition is you have to use, if you take some loss from other company, you have to use it now. You have to use it now. You cannot store the loss of another company for future. No, it's not allowed. You have to use it now. So what's the conclusion? In this case, see the screen. In this case, A has trading loss of 200 and B has TTP of 120. So A can only transfer 120. A can only transfer 120 loss to B. More than 120, A cannot transfer. It's not allowed. Okay. Now, some important points to remember. Now, surrendering company can surrender this first point. I have already taught you in detail. Total 5 points on the previous slide I have already discussed. Surrendering company can surrender. These are actually 5 things. Right now in this slide it is 3, but total 5 points I have already told you. Okay. claimant company can use this loss to set off its TTP. This I also told you. This I also told you. Claimant company will set off its TTP. Now, third point. This is very important. Claimant company first use its own loss and then group loss. What does it mean? First, you have to eat your own food. First, you have to eat your own food and then your brother's food. Okay, so what if claimant company has some losses of himself as well, plus he has taken some loss from his brother. So first he has to use his own loss. First company has to use its own loss. Okay, don't forget. Claimant company must use group loss in the same period. Claimant company, I already taught you this, company can't carry forward other company's loss. You cannot store the loss. You can, if you ask somebody's loss, use it immediately. Use it immediately. You cannot carry forward other company's loss. Okay. Surrendering company is a company, yes, I told you, which is giving away his loss. Claimant company is a company who's receiving the loss. Already done. Now, overseas foreign companies may become part of 75% group, but losses can't be exchanged. Yes. What if see the screen, we have 90% shares, we have 90% shares in B company, A has 90% shares in B company, and B company is a foreign company. So can foreign company be part of this 75% group? Yes, but that foreign company will be a silent member, you cannot take foreign company's loss to for yourself, and you can't even give away your loss to that foreign company. Losses cannot be exchanged. That means this overseas foreign company will be a silent member. Or you can say this overseas company may connect you with other companies. That's it. No more exchange of losses, no more exchange of losses with foreign companies. Now, dormant companies are never included in any groups. If there is a dormant company, means inactive company in any group, you have to ignore that company, even if that is a 75% group or 51% group of companies. Even if that is a 75% group or 51% of group of companies. I hope you remember 51% group is used for limits apportionment. I hope you remember we just discussed before break that 51% group is used for limits apportionment, for large and small company. Use your memory. And the last but not the least, make sure the accounting dates of group members are aligned. Make sure the accounting dates of group members are aligned. Sometime it happens that there are two companies in group of companies. One has accounting date end of 31st December and other has 31st March. So in that case, you must have studied this topic in normal classes. In that case, you need to apportion and you need to restrict the losses. In that case, you need to restrict the loss transfer, and you need to match the months. Okay, so these are very important instructions for this topic. I hope you got it. Okay, the last group is capital gains group. Now the question is, sir, what are the conditions? What are the conditions of making capital gains group? Simple, it's written in front of you. For each level, direct holding must be greater than 75. This is must. And for big group, indirect subsidiary group, you must have indirect holding or effective holding must be greater than 50. Indirect holding must be greater than 50%. Okay, now look at here. A has 80% shares. A has direct 80% shares in B, that means greater than 75. Yes, A and B has become members of capital gains group. B has 80% shares in C. B has 80% shares in C. Yes, B and C part of 80%, part of capital gains group. Now, if you want to connect A, B, C, if you want to make a big group A, B, C, now calculate the effective holding. So this is 80 multiplied by 80, that is 0.8 into 0.8, which is 64%. And yes, this 64% is greater than 50%. So For capital gains group, 50% indirect holding is even enough. So ABC, you just saw the A in ABC has made the capital gains group. Okay, now A has, now again come to the top. A has direct 80% holding in D. A has direct 80% holding in D. That means D is also part of capital gains group. But now the first condition is not meeting here. D has only 60% in E. Come on, kick out E. D has only 60% in E. That means direct holding is less than 75. Direct holding is less than 75. So first condition is breached. So no need to do further work. But still, if you want to check indirect, 0.8 into 0.6, which is also 48%. But both condition must be met in one time. Okay, so your capital gains group is ABCD. Your capital gains group is ABCD. Now question is, sir, once we make a capital gains group, what are the reliefs available? There are three reliefs available. Once you make a capital gain group, once you make a capital gains group, you can do three things. Number one, physical, open your eyes, physical transfer of chargeable asset between group of companies. Physical transfer, physical sale purchase of chargeable asset between group of companies. How they will be treated? Read it. They will be treated as no gain no loss transaction. No gain no loss transaction. No gain no loss transaction. Okay, right? Physical transfer of chargeable asset between group of companies will be treated as no gain no loss transaction. Just like, just for your hint, just like married couples, hope you remember the day one revision day we discussed married couples and civil partners. Husband sells chargeable asset to wife. Such transactions are also no gain no loss. So similarly, when one member of capital gains group sells a chargeable asset to another member of capital gains group, this transaction is a no gain no loss transaction. This transaction is a no gain no loss transaction, right? Okay, now number two, notional transfer. Notional, I hope you remember notional cost in your studies. Notional cost, notional means imaginary, in imagination. Notional transfer of gains and losses between members. What, for example, a sold a chargeable asset to a third party, and a got a gain. A company got a gain. Now what a company can do, a company just simply just simply transfer that gain to B company by through election. That means complete gains or loss, complete capital gain or capital loss, you can transfer to your brother. Complete capital gain or capital loss, you can simply transfer to your brother. Okay, so this is basically notional transfer of chargeable gains or losses. How to use it? For example, listen, a company has gain of 200 and B company has capital loss of 100. I'm sure you all know this, that capital loss can only set off capital gain. Capital loss can only set off capital gain. Listen, so B company has only capital loss and A company has only capital gain. So B company cannot use capital loss for himself. B company cannot use capital loss for himself. So what B company will do? B company will transfer. B company will transfer this capital loss to his brother A, and then this capital loss will set off this capital gain. So automatically they will get quick relief. Okay, and the last thing is rollover relief. What rollover relief you studied in on the day one? In the day one, when we were discussing only single company, so what we used to do, a single company first used to sell an asset and they used to reinvest in another business asset, but the company must be same. At that time, one company has to do the whole procedure. But now just think like this group, think like this complete group. See, one group member will sell the asset, one group member will sell the asset to third party, and another group member will reinvest. Another group member will reinvest in a chargeable business asset. So automatically the gain will be rolled over. Automatically the gain will be rolled over for group. Automatically the gain will be rolled over for group. Okay. So now we are doing the same thing from group point of view. We are doing the same thing from group point of view, not single company's point of view. Okay. So keep in mind these three reliefs. These three reliefs are available for capital gains group. These three reliefs are available for capital gains group. Now, one very important point, cash marks. For example, see, this is a group ABC. ABC. A has 100% holding in B and 100% holding in C. A has 100% holding in B and 100% holding in C. So can you see all groups are formed between ABC? All groups are formed. All groups are formed. 75% group is also formed. See, the holding is greater than 75. So 75% group is also formed, and capital gains group has also been formed, right? So all groups are formed in between ABC. Now the question is, what if examiner gave you interaction of two groups together? That means in one question you are asked to solve capital gains group as well as 75% group, capital gains group as well as 75% group. So what should be your order? What should be your order? Which group working you have to solve first? There is a order, there is a mandatory order which you must follow. Which group working you must solve first? And the rule is also giving you logic. Rule is always solve capital gains group issues first. Always solve capital gains issues first, and then 75% group. Now the question is why? Listen, because in 75% group you set off this TTP. You remember, in 75% group you set off this TTP. And how this TTP is calculated? Through this complete working. So if your capital gains are wrong, see, in capital gains group you have to set off this gains. So if you haven't done this gains working first, your TTP will be coming wrong. My dear student, just think, if somebody has forgot to solve capital gains first, that means his TTP number is also wrong. So how can you work on TTP before doing gains, without doing gains? Not getting. My dear student, first your capital gains and capital losses issues must be resolved, then you can calculate correct TTP. So this order is a must follow order, that whenever two groups came together in the exam, capital gains group and 75% group, it's mandatory for you to solve capital gains group working first and then 75% group. Okay, right? I hope you got it. Come on, hit a message on WhatsApp. Hit a message on WhatsApp if you got it. If you understood it, kindly hit a message on WhatsApp. Now, my dear students, you I hope you remember the 51% group. 51% group is used for apportionment of limits, to identify that the company is a large company or small company. Companies are large or small. Okay, so there is one very important instruction which you all must know. I think you must have known this by now, but still this slide is also very important. For example, this what right now I'm talking about 51% group, the limit apportionment thing, right? For example, at the end, this is your accounting period. This is your accounting period, that is 1st January 019 to 31st December 19. your accounting period is 1st of January 2019 to 31st of December 2019. Okay, listen, you have at the end of last year, the group structure is this. At the end of the last year, you have A, B, C, D, E. Okay, now during the year you sold B, during the year you sold B company, during the year you sold B company, wait, during the year you sold this B company and you bought another company F. Now, which companies you have at the year end? Which companies you have at the year end? You have at the year end. Now, the year end structure is A, C, D, E, F. A, C, D, E, F. Now the question is, during the year the group structure has changed. One company you sold, one running business, one company you have sold, and one company you have bought. Now which companies are included for limit apportionment? The rule is, read the rule. Companies which are part of our 51% group, companies which are part of our 51% group on the last day of previous accounting period, or last day of previous accounting period, those companies must be included in limits apportionment. That means these all will be included in limits apportionment. Okay, those companies which are part of 51% group of companies on the last day of previous accounting period, they must be included for limit apportionment. That's the rule. So company F we don't need to include, company F we don't need to include for limit apportionment. And one thing more, for limit apportionment, holding must be greater than 50. Now the question is, sir, what if we have a foreign, what if we have a foreign company, we have holding of 60% or 70% in a foreign companies? Yes, foreign companies are also included in limit apportionment. Foreign entities, foreign companies are also included in limit apportionment. Foreign entities are also included in limit apportionment. Okay, if you have holding greater than 50%, right? Okay, so this was a quick recap of corporation tax thing. Now we are going to move towards the software again. We are going to solve the practical questions. Okay, I'm going to switch off the camera. Why? Because I want you to see the big complete question on the software screen. Okay, I have already sent you the question. This question. You must have this question with you. You can check your WhatsApp as well. Okay, let's read it first. Wait. Okay, I think I have enlarged the screen. Can you see? Okay, now Soft App Limited is a software developer. The company's summarized statement of profit and loss for the year ended 31st March 2020 is as follows. Okay, one more thing I would like to recommend you guys. Listen, keep a paper and pen with you and write the accounting period with you, because you will understand very good if you have a paper and pen. Please write it something. See, your year end is 31st March 2020. It's a complete year. Your accounting period is exactly 12 months. Your accounting period is exactly 12 months. Okay, so Soft App Limited is a software developer. The company's summarized statement of profit and loss for the year ended 31st March 2020 is as follows. What's the operating profit? See, what's the operating profits? Operating profit is 913, and they have given the reference of note number 1. income from property is 36,700. Loan interest receivable, that means interest income, is 8,100. Profit on disposal of shares is 64,900, right? Finance cost, you have interest payable of 67,200, and this all, if you add all these things, it makes profit before tax of 95,500. Okay, right? Let me open the next window because the question is in different windows, right? Now this is, wait, let me enlarge it so that you can see. And still, if you can't see this, I've already sent you the question. Even you can open your exam kit and you can watch it. Okay, be very active, boys. Now what's the next line? Depreciation of 8170 and amortization of leasehold property 2500 have been deducted in arriving at the operating profit of 913. Please use your brain. I beg you to use your brain. This depreciation and this amortization is accounting amortization and depreciation. These both are accounting amortization and depreciation, my dear students. I taught you trading income yesterday. I told you accounting depreciation and accounting amortization strictly not allowed. They never allow accounting amortization depreciation. So these two numbers, 8170 and 2500, must be added back. When I'll do the working, I will add back these two. Okay, right? Now then, income from property, this is property income. Don't forget property income. Now wait, what's the message? What's the news? Listen the news first. For individuals, we all know, for individuals, look at here. For individual, property income is taxed on receipt basis. For individual boys and girls, property income is taxed on receipt basis. But for companies, property income is taxed on accrual basis. So please make your mind for accrual basis. Not cash basis. Okay, and in accrual basis, payment is not important. We have to count the months, how many months we have provided the services. Listen to me, how many months you have provided the service to the tenant. Okay, count your accounting period months and then think about the service. Okay, let me read it. Since 1st November 2019, underline the date, 1st November 2019, your accounting period is ending. Please use the pen and paper. Please follow my instruction. Use the pen and paper and write. Your accounting period, we all know, it's ending on 31st March 2020. Accounting period is ending on 31st March 2020, and you have given the property on rent on 1st November 19. Read it. You have given the property on rent on 1st of December 2019. 1st of November 2019. So how many months you are providing service? Counted November, December, January, Feb and March. Only 5 months you are providing services to the tenant. Only 5 months you are providing service to tenant. Okay, now they are saying the income from property figure of 36,700 is made up of the following income and expenditure. See, that's how they have calculated. They have ready-made calculated, but we have to challenge them. If you find any mistake, you have to challenge him. Okay, now the first thing is advertising for tenants. Yes, it's allowed, and this advertisement lies in accounting period. So yes, it's allowed expense. Advertisement is full-time allowed expense. You all know. Then security deposit of 2 months. My dear student, I'm sure you must have studied this. Security deposit is just for security purpose, and you have to return one day. For example, a tenant is coming and he is giving me security deposit. So this security deposit is not my income at all. This security deposit is not my income at all. I have to return back. So it's never an income. It's never an income. This line is irrelevant. This line is irrelevant. This must be excluded. But unfortunately this guy has added it, so we need to subtract. We need to remove this 10,400. This is total wrong. Security deposit is not your rental income. Now then what is written? Rent for the quarter ended 31st January 2020. Yes, these 3 months. Quarter means 3 months. Count it. Quarter means 3 months, and the quarter which is ending, on 31st January means it is starting in November. So November, December, January, the 3 months falls in your accounting period. And yes, you have provided for service in these 3 months in your accounting period. So yes, this is absolutely correct. This 15,600 is absolutely correct, no doubt. Now next, what is it written? Insurance for the year ended 31st October 2020. See, you have paid insurance from 1st November to 31st October. Please use your brain. Your brain must be active. You have paid insurance from 1st November to 31st October. 1st November to 31st October. 1st November to 31st October. And yes, Feb and March. Only 5 months of this payment lies in your accounting period. Only 5 months of this payment lies in your accounting period. Remaining 7 months belongs to next accounting period. So my dear boys and girls, you have to do 5 months apportionment out of these 12 months. So how you will do? How you listen the lecture so that you can understand the solution in the end. This 1200 is for 12 months. This 1200 is for 12 months. You just have to apportion it into 5.12. You just have to apportion it into 5.12. Okay, so only 500 was allowed, but this guy has deducted 1200. I will update this. Okay, then now, very good. On 2nd February, you receive the rent for the quarter ended 30th April. For the quarter ended 30th April 2020. For the quarter ended 30th April 2020. Now just think, the quarter which is ending on 30th April 2020 is starting on Feb. So count the months: Feb, March, and April. This rent is for the quarter of Feb, March, and April. And yes, Feb and March lies in our accounting period, but April is outside of our accounting period. April does not lie in our accounting period. I hope you wrote the accounting period in front of you as instructed by me. So out of this 3 months rent, only 2 months rent you need to take. Out of these 3 months rent, only 2 months rent you need to take. Okay, now next, so you will do 15,600 multiplied by 2 upon 3. 15,600, the second rent, I'm talking about the second rent. 15,600 into 2 upon 3. Okay, then 20th March 2020, repairs is a revenue expenditure and it's full time allowed. Repairs is a revenue expenditure and it's full time allowed. Now look at the dodge. What an excellent dodge. You have booked the repairs, but you got the insurance claim. See, the insurance claim is 9,700, but insurance claim is received next year. No matter, look at me, no matter the insurance claim has received physically next year, but we are not working on cash basis. We are doing in accrual basis for companies. So the period in which you book the repairs, the period in which you had the loss, you will set off the insurance claim in the same period. So what's your net cost? Listen, 9,700 minus 12,800. 9,700 minus 12,800 will be your net cost, and you will book the net cost you will book the net cost in your accounting period. Okay, no matter the insurance claim is physically received on 4th April 2020, we are not working on cash basis. We are not working on cash basis. Okay, wait for azan, it's azan time, wait. Okay, okay, dear students. Okay, dear students, look at it. Look at the screen. Look at the screen. Now, note number three is loan interest receivable. Loan interest receivable. If you remember, I taught you through T accounts. Today, I taught you through T accounts. Okay. I told you just to keep a pen and paper with you. Come on, make a T account, and see. The loan was made for non-trading activities. Openly, they have written. Openly, they have written the loan is made for non-trading activities. The loan is made for non-trading activities. Okay. And on 1st July 2019, on 1st July 2019, now use your brain. Your accounting period, your accounting period is 1st April 2019. Your accounting period in this case is 1st April 2019 to 31st March 2020. 1st April 2019 to 31st March 2020. Okay, you don't have any investment in any loan investment at the beginning. See, it has been done on 1st July. So at the beginning of the accounting period, there is no investment. That means no opening accrued. No opening accrued. Make your T account. Come on, make your T account with opening accrued 0. No opening accrued. Then loan interest of 5600 was received. Actual cash is 5600, and interest of 2500 was accrued at 31st March 2020. Your closing accrued income is 2500. I hope you remember the T account. Right, closing 2500 and cash 5600, you will get the PNL number of 25 plus 56 is, I think, 81. 25 plus 56 is 8100. So your accrued, so your income on accrual basis, interest income on accrual basis is 8100. And those boys and girls who are doing with formula, so the simple formula is closing accrued plus cash. Closing accrued plus cash will give you income for the year. So this income will primarily go in the loan relationship box. This income of 8100 will go in loan relationship box. I'm sure you remember the loan relationship box, interest income box. But sometime interest expense also comes in loan relationship box. If if you have if you have if you have taken loan for non-trading activities or for properties. If you have taken loans for non-trading activities or for properties. Okay, properties for letting. Now next let me move on. See, note number 4 is Easiest, it's ready-made marks. Believe me, it's ready-made marks. What is written? The profit on disposal of shares in respect of the sale of soft app entire 2% shareholding in network limited on 28th Feb 2020. Yes, 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 this date falls in our accounting period. This date falls in our accounting period. This date falls in our accounting period. Okay, so this gain belongs to our accounting period. Okay, but as this is companies, so you might have heard about the word indexation allowance. Companies also get indexation allowance, but read the good news. What's the good news? The disposal resulted in a chargeable gain of 61,300, and read it. This figure is after taking account of indexation. Thank God. Already they have deducted indexation, so this ready-made gain is used for the format. This ready-made gain will be used for your format. Ready-made gain will go in your format, will go in your corporation tax format. Okay, now listen, it's time for maghrib, so we are taking a short 8 minutes, 7 to 8 minutes break. Refresh yourself, and then I'll be completing this question with you. Okay, okay, so we are taking a break. Okay, so we are resuming the class again, and now okay, before the break, before the break, let me shift to the question. Okay, we discussed till note number 4. We discussed till note number 4. Now, note number 5 is the most technical part of this question. If you understand this part, you will understand everything. You will understand everything. Okay. Now, what are the rules? If even in my slides I wrote this, if you have taken loan, if you have taken loan for to finance trading activities, then that loan interest will be allowed from trading income computation, trading income working. But if you have taken loan, listen my words, if you have taken loan for other purposes other than trading activities, like for non-trading activities or like for property buying for letting purpose, then for companies such loan interest will not be allowed from trading income P&L. That loan interest will be allowed from loan relationship box, the interest income box. I hope you remember. Okay, now keeping these lines in mind, read note number 5. Read note number 5. This is important. The interest payable is made up of, hope you remember the first page, the interest payable was written. The interest payable is made up of, number 1, 42,200 in respect of the company's 4% debenture loan stock. Interest of 21,100 was paid on 30th September 19 and again on 31st March 2020. So that means the 42,200 belongs to our current period. 42,200 interest belongs to our current period for accrual basis. This is correct. Now read the important line. The loan stock was used to finance the company's trading activities. Yes, this loan interest will be allowed from trading income P&L. This 42,200 is perfect, and this will be allowed from trading income P&L. No problem in this. No problem in this. Now read the next line. Read the next line. This is the real line. 25,000. See how much is the interest in the first page. You can see you have the question. It's 67,200 is the total interest. 67,200 is the total interest. And how you got this 67,200? 42,200 plus 25. 42,200 plus 25. Keep your calculator with you. Keep your calculator with you. Now note number 2, 25,000 in respect of a loan to acquire a freehold office building. The building has 5 floors. The building has 5 floors, one of which is let out. And we just discussed note number 2. Out of 5 floor, one is used for non-trading purpose. Out of 5 floor, one is used for non-trading purpose. That means 25,000 times 1 upon 5. 25,000 times 1 upon 5 is the interest for non-trading purpose. Interest for non-trading purpose. So take out your calculator and just do 25,000 times 1 upon 5. The 5,000 amount belongs to non-trading activities, and that 5,000 interest, will be deducted from loan relationship box. That 5,000 interest will be deducted from loan relationship box. And yes, remaining 20,000 is for trading activities, then that interest will be part of our trading income. That interest will be part of our trading income deduction. Okay, so now what is the total amount of interest? What is the total amount of interest to be deducted? Total amount of interest to be deducted from trading income. 42,200 is perfect. 42,200 is perfect, plus 20,000 from note number 2. 42,200 is perfect, plus 20,000 from note number 2. This makes 62,200. This makes 62,200. Please listen carefully. 62,200 is the trading is the interest for trading activities. This will be deducted from trading income. and the remaining 5,000 interest is for non-trading, that is for property, and that will be deducted from loan relationship box. Now for your information, see the screen, the immediate screen. You have one interest income, of loan relationship, that is 8100, interest income from loan relationship, that is 8100, and you have interest expense on this property, that is 5000. So loan relationship box will be 8100 minus 5000. 8100 minus 5000, I think it's 3100. Your final loan relationship box is 3100, right? Okay, so right now we are just discussing the question. Okay, now the next part. Now this is the capital allowance part. Wait, some information actually in this software, some information is missing. You can check your WhatsApp question. I have the question with me. The capital allowances portion is little bit missed in this software. See, the tax written down value, use the WhatsApp question, or check your exam kit question, please. The tax written down value of soft app plant and machinery as at 1st April 2019 was 9,000. Okay, plant and machinery means main pool. Your main pool opening balance is 9,000. Okay, you will make a column and you will write it simply. Now during 2019, soft app refurbished part of its freehold building, which is used by companies employees as a staff room. Okay, it's a business building. The total cost, what is the total cost? These are the expenditures. Write it. Number one, now you can see the screen, it's on your screen as well. Integral to the building, integrated part of the building, heating system and ventilation system. You know, integral parts of the building are part of SRP. So this 93,600 and 75,600, this 93,600 and 75,600 will be part of SRP. And then not integral to the building, this amount is look at here, 38,400 furniture and furnishings and refrigerator and microwave cooker. Now wait, I hope you remember the rules. The integral part of the building are part of SRP, and not integral part of the building like furniture and refrigerators, they are part of main pool. But the good news, what's the good news? In this year you have AIA of 1 million. Now yesterday we discussed the limit of AIA is 1 million. 1 million means 10 lakhs. Okay, and look at these expenditures total is 209,000. These expenditure total is just 209,000. So they will be finished, they will be taken to the right column of allowance through AIA. They will be given relief through AIA, right? And still we have unused AIA. Right now we have a lot of AIA, 1 million. Okay, and nothing such thing as car like this in this, because yesterday we studied no AIA on cars, and there is no car in it. So easily you will easily claim everything through AIA. Now sir, we have opening balance, of 9,000. Okay, you will get normal 18% WDA. On that opening balance. Okay, right? Okay, now the last wordings. Subsidiary. Soft Tap Company owns 100% of the ordinary share capital of Bite Size Limited. What does it mean? 100% is greater than 50 as well as 75. 100% is greater than 50 as well as 75. So this bite size limited will be part of 51% group as well. So it will be used in apportionment. It will be used in apportionment, number one. And number two, this is also part of your 75% group. This is also part of 75% group. That means losses can be exchanged. Losses can be exchanged if possible. Losses can be exchanged. Okay, so don't forget to apportion the limits. Don't forget to apportion the limits, number one. Number two, if examiner asks you about 75% group commentary, then you need to comment on it. Okay, now giving you 30 seconds just to read it and analyze it, then I'll be going to the requirement. I'll be going to the requirement. Wait, now the requirement is read the requirement. What's the requirement? Calculate the soft app limited corporation tax liability. Directly they are asking about the corporation tax liability. That means you have to work on complete format. Calculate soft app limited's corporation tax liability for the year ended 31st March 2020. For corporation tax, you need to make complete for pro forma. Pro forma means trading income you have to calculate. You have to compute gains which are ready made. You have to calculate property income. And then finally you have to calculate interest income. Everything you need to compute. Okay, as now I have discussed the question with you, so I will not open question in front of you, but yes, during while solving the solution, I'll recap you things. So be very attentive, and it's better you keep the question in front of you so that you can see anything immediately. You can see anything instantly. Okay, now assume see what a big assumption. First, one thing we have to calculate the corporation tax liability and state the date that is due for payment. Now for corporation tax payment, you need to identify the company's large or small. I just taught you before the namaz break. Okay, so yes, this thing is also relevant. That the due date, and for that you have to identify large or small. One good news, ready made. Assume that soft app was not a large company in the previous accounting period. Wow, that means this company is not a large company is last accounting period. And if it is a large company now, still he will get the still this company will get exemption. Why? This company is not a large company right last year, and if this company is a large company this year, still they will get exemption from installments. I just taught you this topic recently. I taught you this topic, this exemption topic. Okay, so now let's move to the solution. Let's move to the spreadsheet. Let me enlarge it. First of all, we are going to write the main heading on the front. Adjustments of profits. See the heading. yesterday on the day one, I told you a exam technique. I hope you remember. Read the notes of the requirement. Read the notes of the requirement they have given. They must have given you from which profit we have to start. Read the notes of the requirement. They must have given you from which profit you need to start. From which profit you need to start. Okay. So your operating profit is 913,000. Your operating profit is 913,000. Operating profit is 913,000. Okay. Now you remember the note number one. They have already deducted accounting depreciation. They have already deducted the accounting depreciation and amortization. And accounting depreciation and amortization are never allowed. Accounting depreciation and amortization are never allowed. Hope you remember. So what we'll do, we'll add back accounting depreciation and accounting amortization. We will add back accounting depreciation and accounting amortization. See, accounting depreciation is 8170 and accounting amortization is 2500. We just did it. Now let's start workings. Let's first work on interest payable. See, I'm giving here the reference and we'll do working on a separate area. Now hope you remember the note of interest payable. You have the question, the debenture interest was pure for business purpose. The debenture interest was for trading, the debenture we have taken loan for trading activities. So 42,200 is pure for business. 42,200 is pure for business. See, I have written. And the second interest of 25,000, the second interest of 25,000 was related to property in which there were total 5 floors, and only 4 floors were used for business purposes. Only 4 floors were used for business purposes. So 4 upon 5, that is 20,000. And the remaining 5,000, as I told you, as I told you, open your eyes, as I told you, will be deducted from loan relationship box. So see, 62,200 is your loan interest, which will be deducted from trading activities, okay. So see, I have made the link. And as interest is an allowed expense, so we'll subtract it from the format, okay. Right now we are going to calculate the trading income. Now for trading income, there is one very easiest working, that is capital allowances. Let's work on capital allowance. Okay, we have given the reference. Now the working will be separate. Capital allowance. See, okay, one more thing. Try to bold, underline the headings. Okay, this is written in exam techniques. Okay, do neat and clean work so that it is easier for examiner to give you marks. Right now, for capital allowances, in this question we'll make main pool. And also a special rate pool. You can make but it will be of no use, but we are making. And the last column will be allowance. Okay, so main pool, special rate pool, and allowance. See, I have just bolded. Okay, now what's the opening balance? Of the main pool. Is 9,000. Opening balance of the main pool is 9,000. Now you have some additions, which are related to SRP, and some additions are related to main pool. Now what's the order? Let's follow the format. Yesterday I told you, I remember I told you, for AIA, always give, for AIA always give first priority. For AIA always give first priority to SRP assets and then main pool assets. First priority to SRP assets and then main pool assets. Okay, so SRP assets are there were two SRP assets. Integral features of building were heating system and ventilation system. See, heating system and ventilation system. So first of all, I'm going to include heating and ventilation system. Okay, first of all, I'll use AIA for heating and ventilation system. Heating system is, I think, 93,600. Heating system is, I think, 93,600, and ventilation system is 75,600. Ventilation system is 75,600. Okay, now add these two. 169,200, 169,200. Right, now just think how much AIA you have. How much AIA you have? You have 1 million in your pocket, so 169,200 is nothing. 169,200 is nothing. Okay, so this 169,200 will be taken to the allowance column. 169,200 will be taken to the allowance column. Okay, right, now there were few more additions. And those additions also qualify for AIA. There were few more additions. Those additions were also qualify for AIA, and those were main pool additions. I think furniture and furnishings, and refrigerator and cooker. Furniture and furnishings and refrigerator and cooker. And refrigerator and cooker. Okay, so furniture and furnishings is 38,400, 38,400, and refrigerator and cooker is 14,1,400. So the total came out to be, I think, 39,800. And still we have a big quantity of AIAs available, so easily we'll use it. Easily this will also go in allowance column, 39,800. Okay, now see, we have taken this to the allowance column as well. Now, sir, what will happen to SRP? Nothing will go in SRP. SRP column will remain blank. But yes, for main pool, use your brain. What's the format of main pool? Opening balance, add addition, less disposal. Opening balance, add addition, less disposal. There is no addition and no disposal, so opening balance will become the closing balance. Opening balance will go for the closing balance. Okay, same 9,000. Now, in finally, this balance will be qualified for WDA. You know, main pool WDA is 18%. Main pool WDA is 18%. Main pool WDA is 18%. Okay, and as it is a 12 months accounting period, question, so no need to apportion, the WDA, okay, so I think it's 1620, and this will also go in the allowance column. My dear student, see, we have just done the capital allowance part. Let's add up the capital allowance. Let's add up the capital allowance. It's 210620. It's 210620. Let's bold it. Now Now you can see this, please see this working. Yes, yes, you can use. One student asked a question, can we write MP main pool? Yes, you can, because examiner knows taxation. Okay, all of you, please, if you got this working, capital allowance is working, please hit a message, on WhatsApp, please. Connection is very important. Please hit a message on WhatsApp if you understood this capital allowance working. If you understood this capital allowance working, kindly hit a message. Okay, now dear students, let's fix this capital allowance in the main format. Let's fix this capital allowance in the main format. See, now see, we have done everything related to trading income. We have done everything related to trading income only. We added depreciation and amortization, accounting depreciation and amortization, and we have deducted. Now your final trading profit is 650,850. Only one thing we just have calculated. Let's keep quiet for 30 seconds. Let's keep quiet for 30 seconds. See, the trading income working has been done. The trading income working has been done. The trading income thing has been done. Okay, but now if you think about, dear student, think about the requirement. Your requirement is not only trading profit, but you have to calculate complete corporation tax. You have to calculate complete corporation tax, and for that corporation tax you have to make complete pro forma. In pro forma there are more things. In pro forma there are more things like property income, like capital gains, like interest income. So still three workings are left, but only property income working is little bit detailed. Only property income working is little bit detailed. The rest things are very easy peasy, very easy, very easy. Okay, so now let's do property income working, but for that keep the question in front of you. Keep the question in front of you, and whatever I taught you, whatever I discussed with you, think over it. Okay, let's start property income working. First of all, in property income, how much rent we need to include? How much rent we need to include? 15,600. One payment was complete, and other 15,600 only 2 upon 3. One 15,600 relates to our period, take it as it is, and the another 15,600 just take 2 upon 3. Just take 2 upon 3. Okay, so one 15,600 I am taking complete, and another 15,600 I am taking 2 upon 3. See this. Okay, so this came out to be 26,000. Now if you see the question, there is another thing, security deposit. There is another thing, security deposit. We all know this, security deposit. Security deposit is not your income. Security deposit is not your income, so definitely just write 0. Just write 0. That means if in the question security deposit they have added, it was wrong. Just exclude it and write 0 for security deposit. That's not your income. Now let's pick up the allowable expenses. Let's pick up the allowable expenses. Let's pick up the allowed expenses. Let's pick up the allowed expenses. The first thing is advertising. The first thing is advertising. Advertising is full time allowed. Advertising is full time allowed, and also relates to our accounting period. So 600 is full time allowed. The second thing is insurance. I hope you remember, Insurance was from 1st November to next October. 1st November to next October, and only 5 months of that payment lies in our accounting period, and we are doing for accrual basis. So November, December, Jan, Feb, and March. Apportion insurance for 5 months. 1200 times 5 upon 12. 1200 times 5 upon 12. Okay, it's 500. And the third thing, the repairs. You remember the repairs? The repairs cost was 12,800 and we got the insurance claim of 9,700. So what is the net cost? Repairs cost was 12,800 and we got the insurance claim of 9,700. So the net cost is 3,100. Okay. Now let's calculate the property income. See, I have applied the sum formula. It's 21,800. It's 21,800. Now I'm giving you 1 minute to analyze it. Okay, I'm giving you 1 minute to analyze it. You can analyze, think over it. See, everything I discussed with you in the question, I just did the same thing. I just did the same thing, nothing else. If you understood this property income part, kindly hit a message. Come on, come on, we need connection, we need connection. Kindly hit a message on WhatsApp, please. Kindly hit a message on WhatsApp, please. Now, so two incomes done, trading income done, property income done. Let's pose this property income in the property income format. In the property income format. Okay, now the third income is capital gains, which is ready made, just copy paste, because we just read this thing with you, that this capital gain is after deducting annual indexation allowance. So already ready-made indexation allowance has been deducted. Ready-made indexation allowance has been deducted. So just copy paste capital gains. Just copy paste capital gains. Okay. Now the last but not the least, the interest income head. Last but not the least, the interest income head. Interest income head is also called loan relationship. Interest income head is also called loan relationship. Let's do the working for interest income. Now, I hope you remember the question. What's the first of all, there was some interest income. There was some interest income. Check it. You remember, some of you made the accounts and some of you may use the formula. So cash interest received was 5,600. Cash interest received was 5,600 plus closing accrued income. Cash interest received was 5,600 plus closing accrued income. 56 plus 25. 56 plus 25 makes 8,100. 5,600 plus 25 makes 8,100. So this is, my dear student, is your interest income. Your interest income from non-trading activities is 8,100. Your interest income from non-trading activities is 8,100. Now, is there any interest expense on for which has been taken? Is there any loan which has been taken to finance non-trading activities? Yes. Do you remember that you took loan for a property? You took loan for a property, and one floor out of five, of that property, one floor out of five of that property has been rented, has been let out. So that interest of 5,000, you hope you remember, that interest of 5,000 you can't deduct from trading income. That interest will be deducted. That interest will be deducted from loan relationship box. See this. 25,000 into 1 upon 5. 25,000 into 1 upon 5. 25,000 into 1 upon 5. So this is the final answer of interest income folder. This is the final answer of interest income folder. This is the final answer of interest income folder. Look at, have a look on this folder, interest income folder. Now let's post this interest income. Let's post this interest income in the main format. Let's post this interest income in the main format. It's 3100. Now if we add all these four incomes, if we add all these four income, that is trading income, that is trading income, property income, capital gains, interest income, we will get total profits, we will get total profits. And as there are, you just we read this question together, as there are no QCD, as there are no QCD in this topic, that's why in this question, that's why your total profits and your TTP is same. Your total profits and your total taxable profits is same. Okay, so this is your final taxable profits, this is your final taxable profits. Now wait, now I have a question. Whenever you get total taxable profit, just one thing, the easiest part of corporation tax, there are no bands, there are no bands at all. Just simply hit 19% on it, just simply hit 19% on it, and you will get corporation tax liability. Just simply hit 19% on it, and you will get corporation tax liability. You will get corporation tax liability. Okay, so one of the major requirement is done. One of the major requirement is done. One of the major requirement is done. Now another thing, please be active. This is technical part, sometimes students do mistake. Another thing, now you have to decide when to pay this tax, and for payment of tax, you have to identify this company is large or small. Wait, for large or small, first of all, check the limits. Your normal limit is 1.5 million. Your normal limit is 1.5 million. Okay, and as there is 151% group of companies, you saw the question with me, you read the question with me, there was 151% group of companies with you 100% holding. So you have to divide limits by 2. So just do it. 1.5 million divided by 2, 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 your limit will be 750,000. 1.5 million divided by 2, your limit will be 750,000. Okay, now the question is, sir, won't we apportion the limit because of accounting period? No, accounting period is exactly 12 months. Accounting period is exactly 12 months, so no need to apportion limit because of accounting period. But yes, because of 51% group, because of 51% group of companies, you need to apportion the limit, okay, so your limit is 750,000. Now tell me, your AP, augmented profit, and TTP in this question is same. In this question, your augmented profit and TTP is same. Your TTP is 737,000. So look at the screen. Your TTP is 737,000, but your limit is 750. That means in this question, your TTP is less than limit. Your TTP is less than limit. That means you are not a large company. You are not a large company. Your TTP is less than limit. Your TTP is less than limit. That means you are not a large company. You are not a large company for corporation tax purpose. Now I would request all of you to think. I would request all of you to think about the payment date. Now, what was the topic for large companies? Large companies normally pays tax in installment, and small company, as this is a small company pays tax. What's the due date? 9 months plus 1 day. 9 months plus 1 day. 9 months plus 1 day from the end of the accounting period. Come on, all of you, please involve. Accounting period in this question ends on 31st March 2020. Accounting period in this question ends on 31st March 2020. Come on, add 9 months plus 1 day. Add 9 months plus 1 day. Add 9 months plus 1 day in it. Add 9 months plus 1 day in it. So obviously this becomes 1st of January, 1st of January 2021. 1st of January 2021. 1st of January 2021. Got it? 1st of January 2021. Okay, so that's the end of this question. That's the end of this question. See, if you understood the question, please, all of you are requested to send a message on WhatsApp. If you understood this question, kindly send a message on WhatsApp. Got it? Wait. Let me tell you few things. Let us say this circle is UK. Writing is not that much good because of broken hand, but you assume this circle is UK, right? And you are a company. You are a company. Listen, you have 30% holding in B company, which is within UK. You have 30% holding in B company, which is within UK. You have 80% holding in C company, which is also within UK, Please, this is very technical area and this will help you in scoring marks. You have some investment outside UK as well. You have 30% holding in D company, which is outside UK, and you have 90% holding in E company, which is also outside UK. Okay, now listen to me very carefully. Each and everything, please listen to me very carefully. Listen, this B company, this B company is within UK, it's your within UK company, right? Is this part of 51% group? No, no, it's not part of 51% group. It's not part of 51% group. It's not part of 51% group of companies. It's not part of 51% group of companies, because the holding is less than 50. Because the holding is less than 50. Now, this B company is part of 75% group. No, the holding is less than 75. No, 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 no. Is this part of capital gain group? No, no, no. Okay. Now, sir, what if we receive dividends from this company? Sir, what if we receive dividends from this B company? Then these dividends are not taxable at all, because for companies all all dividend income is exempt. But yes, these dividends will come, will be added in the part of AP. If you want to calculate augmented profit, if you want to calculate augmented profit, then these dividends from B, these dividends from B will be part of AP, because the holding is less than 50. Holding is less than 50. Now, next, this C company, this C company, as the holding, as the holding in this C company is greater than 75. So yes, this is the part of 75% group. Yes, this is the part of capital gains group. Yes. Can we exchange losses? Yes, yes, within UK company, within UK company and part of 75% group. Look at here, within UK company and part of 75% group. So you can exchange losses, you can transfer your loss, and you can get the loss from this company. Yes, it is part of capital gains group. Plus the holding is greater than 50, plus the holding is greater than 50. So this C company, this C company will be used in limit apportionment. Yes, 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 for large and small company limit apportionment. Now the last question, sir, what if we receive dividends? What if we receive dividend from this company? What if we receive dividend from this company? Then in that case, that dividend will not come anywhere. That dividend will not come anywhere in corporation tax computation. Even, look, even it will not come, it will not come in AP calculation, in augmented profit calculation, anywhere, nowhere. Now, outside UK companies, see this D company. This D company is outside UK investment. As the holding is less than 50, it will not count for limit apportionment. It will not count for limit apportionment. As the holding is less than 75, it's not part of 75% group, no other group. Okay, sir, what if we receive dividends, if we receive dividends from this company? What if we receive dividend from this D company? Yes, this will be part of AP. These dividends will be part of augmented profit, augmented profit. Okay, right? As the company is unconnected, as the company is unconnected, as the holding is less than 50%, that's why these dividends will be part of AP. Okay, last, now this E company, now this E company, E company, in E company your holding is 90, your holding is 90, that means greater than 50. In E company your holding is 90, that is greater than 50, but still it's a foreign company. And I told you, if in foreign company, if in foreign company your holding is greater than 50, if in foreign company if your holding is greater than 50, then that company will be part of limit apportionment. That company will be part of limit apportionment for large and small, for large and small, for large and small. Number two, this company may become part of, 75% group. Yes, this company may become part of 75% group, but be careful, this will be a, this company will be a silent member. Silent member, you cannot exchange losses with this foreign company. You cannot exchange losses with this foreign company. You cannot exchange losses with this foreign company. Okay, sir, what if we receive dividend from this company? Sir, what if we receive dividend from this company? What if we receive dividend from this company? As the holding is greater than 50, as the holding is greater than 50, so these dividends will not come anywhere in the corporation tax sheet, in the corporation tax working. But yes, one thing is remain constant. For companies all dividend incomes are exempt. All, each and every all dividend income are exempt. For companies, all dividend income are exempt. All dividend income are exempt. Okay, right? Now let's let's end our class here, because I planned one more question that was last orders limited, but right now we are running short of time, so we can't rush for that question. We'll do that question tomorrow, and tomorrow we'll be doing the planning, a very excellent planning question that 10 marks comes in exam, that how to withdraw funds from the company, treat yourself employee or treat yourself as a shareholder, these types of planning. Okay, so inshallah we'll be meeting tomorrow. So for today's we are doing till now, right? Okay, take care and don't waste your time. Allah Hafiz.